Hello and welcome to the Global View. It's lovely to be here with you on this Thursday morning, the 9th of July. Well, U.S. stocks finished mixed as renewed geopolitical tensions weighed on broader markets, although a rebound in chip makers helped the Nasdaq outperform. Technology stocks, though, were mixed. Broadcom surged close to 5% after Apple inked a more than $30 billion chip supply agreement with the company, while Nvidia climbed on reports that China may allow leading AI companies to purchase a limited number of its H200 chips. Overall, the semiconductor sector rallied more than 2%. Elsewhere, though, Microsoft, Alphabet, and Meta all declined. Airlines and cruise operators came under pressure as higher oil prices raised concerns about fuel costs. SpaceX also slipped to its lowest close since listing. Now, what we haven't mentioned yet is no big surprise investor sentiment deteriorated after the U.S. President Donald Trump declared an interim deal aimed at ending the conflict in Iran was over, warning of further U.S. strikes. The comments reignited concerns over a broader Middle East conflict and its potential impact on energy markets. Separately, the IMF cut its 2026 global growth forecast to 3%, citing risks from the ongoing conflict, and also downgraded Australia's outlook. Minutes from the Federal Reserve's latest meeting showed policymakers remain concerned about inflation. Markets are now pricing in the possibility of another Fed rate hike by December. U.S. Treasury yields moved higher as investors sold bonds amid rising inflation concerns linked to those oil prices, and the U.S. dollar strengthened on safe haven demand following the escalation in geopolitical tensions. In commodities, worthwhile mentioning that Brent jumped 5.2% to $78.02 a barrel, and U.S. diesel futures posted their biggest daily gain in 4 years as Russia banned exports there. And spot gold dropped close to a tenth of, or close to 1%, on all of the fears. Now, copper prices dropped, iron ore prices rose, and of course on that U.S. dollar playing into the commodity story as well. Well, overarching theme this year and the last was AI. It's everywhere, but for many organizations, the real challenge isn't adoption, it's an execution. So to unpack the next stage in AI development for business, I'm welcoming to the studio the CEO of Thomson Reuters, Steve Hasker. Welcome, nice to see you.
You too, Nadine, good to be here.
Just taking a step back, when we're thinking about the financial services industry, do you see AI as a huge help or perhaps even a hindrance?
No, I think at a high level it's a help. I think the ability for knowledge workers more broadly to take advantage of these technologies and make their, particularly the menial parts of their jobs significantly easier, faster, more automated is a big opportunity. The transition from where we are today to that sort of idealistic, that's where I think the complications come in. And so at Thomson Reuters, we're the largest provider of content and technology to the legal profession, to the tax accounting and audit profession. We're the largest provider of tax calculation engines. So we run a survey every year, we have done for the last 4 or 5 years, looking at the impact of AI on those professions. And what we're finding is that the adoption is very strong, particularly in Australia. So people are using tools, whether it's ChatGPT or it's Claude or one of our tools, to help them perform their work. But the underlying change management within their law firm or their tax and accounting firm or their corporation lags behind. And it might lag as much as 18 months. And that's why we're starting to see CFOs sort of assert that, well, we're spending the money, we can see the token cost, but we can't yet see the benefits in terms of increased speed or efficiency, because that broader change management, so redefining the workflows, the handoffs between different people, understanding truly what the machines can do and what a human being needs to insert themselves to take control of, those sort of fundamental tasks are yet to happen.
And so how is that expressing itself in outcomes? Because you mentioned the CFO, you've got those that are spending big on this technology.
Yeah.
I mean, what are the indicators that the crunch is going to happen or the change will happen?
Well, I think, we're starting to see a bit of a divergence between, as I said, the costs of adopting the technology, so the token costs, whether it's a frontier model or a bespoke application, and the sort of underlying benefits to the bottom line. We've seen a number of particularly large tech companies sort of talk about job reductions as a result of AI, and I think there's a pretty vigorous debate as to whether it's actually AI or whether that's a little bit of a AI washing to sort of cover up for perhaps overhiring through the pandemic and beyond. So that's really the divide. It's where is the impact on the top and bottom line relative to adoption and costs going up. And I think we're in that period, somewhat unsurprisingly, of where you and I are adopting these tools, but have we truly changed the way we work? And until we do that, and we change the way our teams work, we're going to continue to see that divergence.
So it's my understanding that Thomson Reuters is developing its own LLM.
Yes.
Why go that route instead of piggybacking off of some of the...
So we've developed a large language model specifically for the legal profession, which is imaginatively called Thomson. We did it on the back of an acquisition we made a couple of years ago of a group of scientists split between Cambridge University and Imperial College in London. And they've developed a model that's now outperforming the frontier models for sophisticated legal tasks. So we're going to face a very interesting decision in the back end of this year as to whether we make that available to our largest customers, whether we power our Westlaw Advantage, which is our agentic legal research tool, or our co-counsel legal assistant with that model, or whether we continue to work with the frontier models. And so that provides us with some strategic independence, which was the principal reason. And secondly, it provides us, I think, with a great deal of cost flexibility. So many players who are partnering and working with the frontier models are starting to see the costs of those tokens go up to high levels, if not unacceptable levels. Having our own large language model, particularly one that's outperforming the frontier models, the latest frontier models, gives us, I think, a degree of financial and strategic independence and an ability to chart our own course sort of through the next few years. And we very much like the look of that.
Yeah, but does it cost you any less than... This is what I don't understand. Than the tokens that would be used otherwise.
It does. It's fundamentally lower cost for us because we own the content.
Yeah.
So we have, on a global basis, the Westlaw data set and the Practical Law data set. We have almost 3,000 reference attorney editors who spend all day, they're on staff, they spend all day producing best practice content and training our agents. And so we've been able to take the intel out of their heads and get it into the Thomson model, and we've taken Practical Law and Westlaw and get it into the model, in addition to the Reuters news file. So the fact that we own so much of the content that is accurate, curated, built up over centuries, gives us a huge advantage in terms of building a model at a fundamentally lower cost than anyone else can.
Not only cost, but verification, correct? Because with these frontier models, being in media here, I mean, the question always is, if media is sort of taken out of the loop, and that's financially as well, where will AI ultimately be pulling all of its information from?
Yeah, I mean, I think the fundamental point that many people understand, but I think a lot don't, is that these frontier models, these AI models, large language models, whatever you want to call them, are probabilistic technologies. So in other words, they produce a result that is most likely or more than likely. They're not deterministic. And so the professions that we serve, lawyers, tax preparers, auditors, and the like, have to be correct. The consequences in terms of providing bad legal advice, you could lose your license, you could certainly lose a client, if not be fined or even jailed. The same for a tax preparer and auditor. So the standard, we think, for the products and services that we provide to those professions are significantly higher than if you or I are playing around at night with sort of ChatGPT and trying to figure out which restaurant to go to or what our European holiday should look like. And so it's that fiduciary grade AI, which is a term we've coined, which is to serve professions where there is a fiduciary responsibility to be accurate and to be correct and to be timely. And that's the distinguishing factor that enables us to provide fiduciary grade AI versus these sort of general purpose models, is the proprietary content and the expertise that we embed in the agents.
Have you trademarked that name?
We have, yes.
Okay, because I was going to say we might borrow it, but I'll reach out to your team. I'll get my people to speak with your people. How has it been, how's the reaction been to this availability in the legal profession?
Yeah, very positive. So we launched Westlaw Advantage last August in the United States, and we brought it to then the UK and now Australia, and the response has been extraordinary. We've not seen a we have put over the years different versions, updated versions of Westlaw into the marketplace. This has seen the fastest adoption curve by far. So that's the first thing. The second thing is a couple of weeks ago, we basically did a complete rebuild of our co-counsel legal AI assistant, and I've never seen customer reaction like it. The feedback has been fantastic, and we've seen customers drop a number of our competitors and move to that product in the US. And we're bringing that to Australia in September. So we're very, very excited about the potential for that to sort of, in a sense, redefine what fiduciary grade AI for lawyers looks like. And we've got a similar product for tax and accounting professionals and auditors that's getting a similar reaction. So, and you'll hear companies talk about, well, we're investing in AI and we're injecting AI into our products, but we haven't seen an uptick to the top line. We have. We're starting to see hundreds of millions of dollars of organic additional revenue flow through, and so it's very exciting times.
That was my last question, so you answered it. We're out of time. Thank you so much for coming to see us while in Australia. Really appreciate your time.
Thanks, Nadine.
So there's a view on AI from the inside. That's Thomson Reuters CEO Steve Hasker. All right, let's just quickly check in on where we're expecting this local market to open. A big surprise, again, to say that with this uncertainty around the situation in Iran and the wider Middle East, we've got U.S. futures lower to start this Asian session, oil prices rising. We're expecting to see a bit of damage done when this market starts trading in just about a minute and a half. Also, keep in mind that we'll be watching the energy space, which might get a bit of a boost. So stay with us. I'll take you through the open that's coming up next.